There's a major problem in the housing market that most people are not willing to talk about. The fact is, there are frustrations on both the buy side and the sell side, and I'm not sure how long it will take to find common ground on any of this. Even the experts are getting it wrong. And so if you're considering buying or selling a house, understanding these trends is make or break. My name is Iris, your Colorado real estate agent, and the real estate market is still a topic on everyone's mind, especially as we navigate some really unusual times. In a lot of areas, home prices have started to stabilize or even drop slightly due to changes in buyer demand. Now, this comes after a few years of unrealistic price growth. So the tiny cool down might be a welcoming sight for buyers, but inventory levels are limited in a lot of places, which is keeping prices from dropping fast enough. For sellers, the shift means you are not going to see the same frenzy of multiple offers as we did during the pandemic. Those days are gone, and I feel like a lot of sellers are having a hard time coming to grips with that because some of the well-priced move-in ready homes are still selling pretty quickly, especially in popular neighborhoods or markets with good amenities and good school districts. So your house is going to be different than a lot of those, and a lot of people will compare their homes to their friends' homes that sold quickly. Each market, even within the neighborhood itself, they're all different. I recently had 2 decent offers that were declined by the sellers, and the offers were actually not bad. They weren't great as in over asking price like years ago, but they were pretty fair for our current market, and it really got me thinking, how can home prices come down if sellers would rather take their homes off the market and try again later than reduce the price? There are 3 alarming trends that are crushing the Colorado housing market. So we're going to talk about that today. The first thing is stubborn sellers. Now, I know that I'm probably going to get a lot of hate for this one, but it's true. A house is only worth what the buyer is willing to pay for it. If your house isn't selling, it's likely the price. There is a chance that it could be the real estate agent and bad marketing, as I have seen this in the past and witnessed it myself personally. Flipped the marketing and got the home sold for more than what the seller anticipated, but oftentimes it really is the price if the marketing is good. The way that you would know this is if there are a lot of showings but no offers and no real feedback. The neighbor may have sold their house for what you think yours is worth, even if it's the exact same layout. It could be on a premium lot. They may have had more upgrades, maybe a newer roof, and they may have just listed it at the perfect moment, which makes me think of another alarming trend that I'll talk about later. I know in some cases, sellers have to make a certain amount. Maybe it's because they bought at the height of the market and they paid a high price and they have no equity. Maybe they bought a new construction home and they need to sell it in order to hit their next goal in life. The bottom line is the same. It's not worth what it's listed for, and that's the hard truth that no one wants to tell these sellers. For example, I recently spoke to a seller who gets these automated home value estimates in their inbox every month. She told me what her house was worth. I pulled comps on what was actually selling in the area comparative to her home, and we were off by tens of thousands of dollars. There's a couple things that you really have to consider when it comes to home value. You have to know if it's a seller's market, a buyer's market, a neutral market, and having that conversation with a professional who's been in the industry and sees homes being sold every single day, all day long, is valuable when it comes to knowing what your home is worth. You can't rely on an automated bot to tell you what your home is worth. I think that's so wild. You can get an idea generally. Zillow will have prices and people always look to the high side of that estimate. When realistically, Zillow does have a lot of data points, so I'm not going to come against Zillow's data points, but a seasoned professional real estate agent who has sold a lot of homes or been around people that have sold a lot of homes are going to know the best, because these kinds of things can change in weeks, months at a time. So something that happened 2 months ago might be outdated, especially in these trying times. So the seller seemed pretty upset, but I was just trying to explain that once you overprice a listing, there's no going back. It's tainted and nobody wants it. Sellers always think that their homes are worth more because they are just emotionally attached. It's really unfortunate. The second alarming trend is around mortgage rates. As we've all seen, rates have risen significantly over the past year or two as the Federal Reserve is trying to control inflation by tightening the money supply. For context, mortgage rates hit historic lows during the pandemic, with 30-year fixed rates hovering around 3% at one point, which, by the way, everybody refinanced when it got that low. Today, we are looking at rates that are generally in the 7% range, depending on obviously credit score, down payment, and other qualifying factors. But the higher rates are definitely impacting affordability for buyers. Now it's more just the luxury and the upper bracket of that middle class that we're slowly losing that are able to afford houses. For example, the monthly payment on a $400,000 mortgage at 3% versus 7% is drastically different. And this has led a lot of buyers to reconsider or delay their purchases. When you're looking at a $3,500 monthly payment for just an average home, that is not enticing when you could rent for $1,000 less and use that money to save up or do other things, invest in other places like the stock market. And people just don't want to go $1,000 more than what they're already paying just for housing. So where are the mortgage rates headed? I get this question a ton, and this is a question with really no clear answer. But there are some things that you can think about. A lot of economists are predicting that rates might stabilize over the next few months. It really just depends on inflation and job reports. So if inflation shows signs of slowing, it's possible that we could see mortgage rates start to level off or even decrease a little bit. But even if the Fed does lower rates, that doesn't mean that mortgage rates will go down, which we have been seeing recently. In fact, the rate went up when the Feds lowered, which is just beyond frustrating because everyone's looking forward to mortgage rate drops so they can buy the home of their dreams, and they don't. People think that this is going to go on for years and years. And if you look at the last year or so, it's been almost impossible to buy for the average American. I think if you want a lower rate, it's best to see if you can negotiate those points with the seller. I mean, why wait if you can potentially buy down those points? So many people are asking if they should buy now or wait. And this is a highly personal decision that depends on your very personal financial situation and your local market conditions. Some buyers are moving forward to lock in a home before prices potentially raise again, and they're looking into adjustable rate mortgages, which is a slippery slope, or considering refinancing options down the road if rates drop. Now, there is a 2-1 buy down or a 3-2-1 buy down. If you want more information, you can feel free to book a call. But basically, this is kind of reminds me of an ARM, but it stops at year 3. Year 1 can be as low as 1.75, depending on which builder you use or which seller is offering incentives. And this is just generally speaking. There are some APRs involved and things like that, so you have to speak with a professional lender. That's not me. I'm in real estate. But just something to think about. There are different ways. You just have to talk to the right people that can help you and genuinely care about getting you into a comfortable mortgage payment. But refinancing down the road is also an option if rates drop. Even if they don't drop, I refinanced a property and took the equity and dumped it back in and still got a lower monthly payment doing it that way. So it's not always about the rate, but what's going to work for you personally. But on the other hand, if you have the flexibility to wait, you might find a more favorable market in the future with more inventory and potentially lower rates. That is really rolling the dice. I watched affordable homes go from $200,000 to $285,000 in just a year, and that was pre-pandemic. So I say this with caution, but it really depends on your timeline and what's important to you in a home purchase. But I am seeing a lot of buyers getting priced out of the market, and I have been seeing that for years. People keep waiting for a crash, but it's not happening. Home prices are still remaining high. But at the end of the day, you really just have to trust your gut, or maybe even try buying new construction if there's any incentives available. But it's a really tough situation to be in because you want to buy that house. And you want to make sure that you're timing the market correctly. Everybody wants to feel like they're getting a great deal on real estate. But if you buy the right house, you won't regret it, 10, 20 years from now. But if you buy a house that is more work than it is rewarding, then yes, you will have some regrets there. Now, the last thing I'll mention about the alarming trends regarding the Colorado housing market is the knee-jerking behavior the last couple of years. One moment, people are super excited about buying homes, and the next, it's a ghost town. Some houses go quickly over asking price, and some will sit on the market for half the year. Sometimes it's really just the timing. The rate at which the market changes up so suddenly recently is so odd. One week buyers are out and the next week they're completely gone. Everything's dried up. It's so up and down. So it's important to find out what the average days on market is in that specific neighborhood to get a pulse on how you can place your offer and how you can sell your home. For example, homes in Peyton are frozen. I've spoken to a couple listing agents out there and it's a ghost town. These houses are not moving. There's not even any showings. It's not just one house. That's what pretty much all of them are saying, but they can't drop their prices because they bought the house brand new at an all-time high. And they can't sell it for less or they'll be underwater. And that's why it's so important to buy in a market that you know is going to appreciate. Peyton is not a hot housing market yet. Now, I say yet because I think it will be long term, but you just have to plan on staying in the house for a very long time. I know there are some unforeseen circumstances that do come up, but if you are in the military and you might be moving in 2 to 3 years, I would not buy. I would just rent for now until you know for sure that you're going to be there long term, or you are comfortable with what that can rent out for if you are trying to build that portfolio wherever you go. The number of active listings in my market have gone down just a little bit after just hitting like an all-time high. So I imagine prices are going to remain high for just a little bit. Foreclosures are still historically low. And if there truly is backlogged properties that are going to go into foreclosures and flood the market, that's going to take time as well to dump into the housing market. So feel free to book a consultation. The description is below. If you are needing some real estate help, you can shoot me a text, whatever. I love helping my buyers find the best deals in real estate and matching them up with the perfect neighborhood. So you can visit the link that's popping up on the screen. And if you're interested in learning more, make sure you are subscribed and watch the video that's popping up as well. And I'll see you on the next one.